Good morning. As the sun rises and the city wakes up, many of us are starting our day with a familiar routine, stopping by the gas station on the way to work or school. But lately, that routine has come with a bit of sticker shock. If you've filled up your car lately, you've probably noticed gas prices creeping up again. And it's not just here, it's global. From bustling cities in the US to small towns across Europe and Asia, drivers everywhere are feeling the pinch. Long lines at gas stations and worried glances at the price boards have become a common sight. For the third week in a row, oil prices are rising, making families and businesses nervous. Delivery companies are recalculating their costs, and families are rethinking weekend road trips. The ripple effect is real. Higher fuel costs can mean more expensive groceries, pricier goods, and even increased costs for public transportation. For many, these price hikes aren't just an inconvenience. They're forcing tough choices about how to spend and save. What's behind this sudden jump? The answer lies in turmoil thousands of miles away, in Venezuela and Iran. These two countries, both major players in the global oil market, are facing crises that are sending shockwaves far beyond their borders. Political tensions and unrest in these countries are shaking the world's oil supply. In Venezuela, economic instability and political protests have disrupted oil production. Meanwhile, in Iran, widespread demonstrations and government crackdowns are creating uncertainty about future exports. Add to that the threat of international sanctions and the risk of supply interruptions, and you have a recipe for market anxiety. When traders sense trouble getting oil to market, prices spike. The oil market is highly sensitive to any sign of disruption, and even rumors can send prices soaring. Investors and analysts watch every headline, every protest, and every diplomatic move for clues about what might happen next. In Venezuela, a standoff with the US is unfolding. In Iran, widespread protests are creating instability. These political dramas aren't just local news, they're global events with the power to affect economies everywhere. These events are making the oil market jittery, and that anxiety is hitting your wallet. Every time you fill up, you're feeling the impact of decisions and disruptions happening half a world away. It's a reminder of how connected our world is. Decisions in Washington or protests in Tehran can change what you pay at the pump. The global oil market is like a web, and a tug on one end can shake the whole system. So, what exactly is happening in these regions, and what does it mean for oil prices? Let's break it down and see how these distant events are shaping the cost of your next tank of gas. To truly grasp the impact of recent headlines, we need to dig into the numbers that drive the global oil market. These figures aren't just abstract statistics. They shape economies, influence policy decisions, and ultimately affect our daily lives in ways we might not always notice. At the heart of the oil market are two main benchmarks: Brent Crude and West Texas Intermediate, or WTI. These benchmarks serve as the global standard for pricing oil, and their movements are closely watched by traders, governments, and industries around the world. As of this morning, Brent Crude has climbed 83 cents, reaching $62.82 a barrel. That's a 1.3% jump in just a single trading session, a significant move that signals shifting sentiment in the market. Meanwhile, West Texas Intermediate, or WTI, is also on the rise. It's up 76 cents to $58.52 per barrel, matching Brent's 1.3% increase. These parallel gains highlight how interconnected global oil markets have become. Both benchmarks are on track to end the week higher, reflecting a wave of global anxiety and uncertainty. Investors are reacting to a mix of economic data, geopolitical tensions, and shifting supply and demand. Just yesterday, both Brent and WTI surged more than 3% after suffering earlier declines. This kind of sharp movement is a classic sign of market volatility, where prices can swing dramatically in response to breaking news or sudden changes in outlook. Every dollar added to the price of a barrel of oil eventually trickles down to higher costs for gasoline at the pump, jet fuel for airlines, and even the plastics used in everyday products. The ripple effect touches nearly every sector of the economy. That's why these numbers matter so much. They directly influence what you pay to fill up your car, the cost of flights, and even the price tags on goods made from plastic. For families and businesses alike, oil prices are a key part of the financial equation. The big question now is whether these prices will keep climbing, or if they'll settle back down as the market digests new information. Economists and analysts are watching closely, trying to predict the next move. The answer depends on a complex web of global events. ranging from political conflicts and natural disasters to changes in production quotas and international agreements. Each of these factors can send prices soaring or tumbling in an instant. For now, the market remains on edge, with traders and consumers alike bracing for what comes next. Let's take a closer look at the forces driving this uncertainty. One major reason for the recent surge in global oil prices: Venezuela. This South American nation, long known for its vast oil wealth, is suddenly at the center of a geopolitical storm that's sending shockwaves through the energy world. Just last week, the U.S. government made a dramatic move, seizing control of Venezuelan President Nicolas Maduro's assets and asserting oversight over the country's enormous oil sector. This unprecedented step has drawn global attention, as it effectively places one of the world's richest oil reserves under new management. Venezuela holds one of the largest proven oil reserves on the planet, a resource that has long been both a blessing and a curse for the nation. The U.S. intervention has sent ripples across energy markets, with traders and governments alike scrambling to assess the impact. For years, Venezuela's oil industry has been plagued by mismanagement, corruption, and the weight of international embargoes. Production has plummeted, infrastructure has decayed, and the country has been forced to sell its crude at steep discounts, often to a limited pool of buyers willing to risk sanctions. As a result, up to 50 million barrels of Venezuelan oil are now sitting unsold in storage tanks, waiting for a buyer. These vast reserves have become a symbol of both lost potential and looming opportunity. With the U.S. now managing the sales process, there's a real possibility that this oil could soon flood the market at full price, rather than being offloaded at a discount. This would mark a dramatic shift in how Venezuelan oil reaches the world, and who profits from it. Even the mere anticipation of this shift has been enough to push global oil prices higher. Investors are reacting to the uncertainty, and the potential for a sudden influx of oil is making markets nervous. Market strategist Tina Teng points out that the U.S. claim over Venezuelan oil is the single biggest factor behind the recent jump in prices. She notes that the market is now trying to price in a whole new set of risks and opportunities. Around the world, news outlets and financial analysts are closely monitoring the situation. The world is watching to see how this new era of control will unfold, and what it will mean for the global energy landscape. The big question now: will the U.S. release Venezuela's oil reserves all at once, flooding the market and driving prices down? Or will they opt for a more measured approach, releasing oil gradually to maintain higher prices and stability? No matter what happens, one thing is clear: the rules of the game have changed. The global oil market is entering uncharted territory, and every player is scrambling to adapt. As the market reacts to these seismic changes, uncertainty reigns. For now, all eyes remain fixed on Venezuela, and the world waits to see what comes next. With the U.S. in charge of Venezuelan oil, a global race is on. Major companies like Chevron, Vitol, and Trafigura are vying for contracts to export those 50 million barrels. The winner stands to profit big, and the market is watching every move. If the U.S. releases all the oil at once, prices could drop from oversupply. If it's gradual, prices may stay high. This uncertainty is fueling market volatility. Traders are trying to predict which way things will go. The end of discounted Venezuelan oil means a higher base price, but a sudden supply surge could have the opposite effect. The strategy chosen by U.S. officials will shape the market for months. For now, everyone's guessing, and that's keeping prices jumpy. The stakes couldn't be higher. Meanwhile, Iran faces its own crisis. Widespread protests over economic hardship have erupted in major cities, creating deep instability. Iran is a key OPEC member, and any disruption to its oil exports could send prices soaring. Even the threat of strikes or damaged infrastructure is enough to make traders nervous. With two major oil producers in turmoil, the market is on high alert. This double threat is a big reason prices keep climbing. Adding to the tension, Iran has imposed a nationwide internet blackout. This move makes it nearly impossible to know what's really happening on the ground. For oil traders, that lack of information is unsettling. They fear the worst. The blackout signals the government is struggling to control the unrest. If the shutdown drags on, it could disrupt oil logistics and exports. Every new uncertainty adds to the market's anxiety. The silence from Iran is making the world's oil buyers even more nervous. And that's pushing prices higher. Beyond Venezuela and Iran, the Russia-Ukraine war looms large. Russia is a top oil producer, and any escalation could threaten its exports. Past drone attacks on Russian facilities remind the market how fragile supply chains are. Sanctions and rerouted shipments have already made oil delivery slower and more expensive. This constant background risk keeps prices elevated. The market isn't just reacting to one crisis, it's bracing for a pattern of global instability. That's why oil prices are so sensitive to every headline. The world's energy supply feels like it's walking a tightrope. So what do the experts think? Priyanka Sachdeva, a senior analyst, says bottlenecks in Venezuela and Iran are the main story, overshadowing predictions of an oversupplied market. Before these crises, inventories were high and prices were expected to fall. Now fear of supply disruptions is winning out. Analysts at Haitong Futures believe prices will only keep rising if Iran's situation worsens. The market is caught between geopolitical risk and the reality of high inventories. If Venezuela's oil is released slowly, prices may stay high. If all at once, they could drop. If Iran's unrest escalates, prices could spike. If things calm down, oversupply could bring prices back down. For now, uncertainty rules. In the end, rising oil prices are a story of fear and uncertainty. U.S. control over Venezuelan oil and unrest in Iran have created a perfect storm. The scramble for Venezuelan crude and the risk of Iranian supply cuts are driving prices up. Add the ongoing war in Ukraine, and the market is more stressed than ever. The global economy is tightly connected. Political turmoil anywhere can hit your wallet. The future of oil prices depends on how these crises unfold. Will Venezuela's oil be released slowly or quickly? Will Iran's unrest escalate or subside? The answers will determine whether you see relief or more pain at the pump. For now, all we can do is watch and wait. The world's energy supply has never felt more fragile.